All right, good evening. Welcome to tonight's webinar. Tonight we're going to focus on investing, or what I like to call position trading, where we're holding stocks for typically more than 2 weeks, which is still relatively short term, but usually for a few months. And we're looking to hold stocks when they're moving on the daily time frame or the weekly time frame, and not really having to babysit our stocks the way we would with day and swing trading. So this is more for the typical investor managing their retirement portfolio and trying to just spend maybe an hour a week on the market, perhaps even less, half an hour a week. I can scan the entire market in 5 minutes, and we're going to show that process tonight a little bit. And you don't even have to do it every day. If you just want to do your research on the weekends, then I've got strategies for that as well. So this is the least time consuming approach to trading. And I think it's suitable for those people that have a life, that don't want to spend a lot of time monitoring their stocks, but have a very specific process and strategies for identifying opportunities. So let's dive into the itinerary for this evening. I'm going to talk about how I got started in trading, and I want to sort of tell the story behind my approach. I think it's kind of an interesting one that gets to really the heart of why what I do works so well. I'll talk about what I focus on, the specific criteria that I look for in a stock that I'm going to buy for a position trade, whether it's a stock or an ETF, because we can apply what I talk about tonight to exchange traded funds. You can apply it to commodities too, or ETFs on commodities like gold, as we were talking about informally before we started tonight. How long does it take? People always say, I don't want to spend a lot of time on this. How much time do I have to put in? Well, it depends on the strategy, and I'll talk about some different strategies and the amount of time it takes to apply them. I'll show you the Stockscores Education Center, specifically the area for investing. I'll give you an overview of that quickly. We'll go into that in more detail during Saturday's webinar when I talk about tools and education. And we're going to do a market scan, and I'll show you the tool that I created, which is a great time saver. It allows us to really get to the best opportunities quickly using this tool called the Market Scan on my website, stockscores.com. And of course, we'll do questions. I'll try to look at some of your stocks as well. But let's dive right in and talk first about the sort of where my approach comes from, the theory behind the Stockscores approach. All right, so many years ago, I was a university student in finance, and I wanted to figure out how to beat the stock market. I had heard about people that could trade the stock market. Remember, this is 35 years ago. So this is before you could even, do online trading. When I first started trading, I actually had to phone a broker and tell them what to buy and tell them when to sell. It was a much slower process and obviously more cumbersome than it is today. But conceptually, the concept was there that we wanted to buy stocks that were likely to outperform the market. And being a sort of crafty young person, I decided to reverse engineer the stock market. I sort of felt like if I could just look at all the stocks that had done really well, the stocks that I wish I had bought a month ago, 3 months ago, and looked for common characteristics in those stocks, I could then look for those characteristics on new stocks that were starting to move. So I call this reverse engineering the stock market. And so I went to the library, the business library at the university that I attended, the University of Calgary. And there was books there with charts of all the stocks listed on the markets, the Canadian markets and the US markets, which is what I was focusing on. And I went through those charts, and these were books that were printed. It was very different than we have today, where we just go to websites and look at charts. And what I did was looked at all the stocks that had done really well, stocks that went up 100% in a year or 60% in 2 or 3 months. And I started to see common characteristics among them. And along the way, I would actually go through newspapers and manually make charts by going through each day's paper of the stocks that I know had done well and writing it out on paper, on graph paper, each little day, plotting it on that graph paper and creating my own stock chart. And I started to get a real feel for the things that tended to come early in the upward trend. When you take that much time to draw out a stock chart, you start to get a sense of the things that are common. And what I found was the things that I talked about in last night's webinar: abnormal trading activity, spikes in volume, spikes in price after a stock was kind of boring, had low price volatility, and then it came alive with abnormal activity. These were the common characteristics. And these are some of the things I'll elaborate on tonight. And I ultimately created my own model for doing this. And I used to hang out at the Alberta Stock Exchange because it was one of the places where I could get free real-time stock quotes. And you may have seen, I sent out an email leading up to this webinar, a picture of me on the floor of the Alberta Stock Exchange. A story was done on me by the New York Times. And in that story, I talked about my approach, and they took some pictures of us on the Alberta Stock Exchange. So that's the genesis of how I came to be a stock trader. I reverse engineered the stock market, and then I would spend about an hour a day at the Alberta Stock Exchange because they had real-time price computers for people to use. You know, at the time, it was very expensive to get real-time quotes. So I used to go down to the exchange about an hour before the market closed, and I would look for stocks using their terminals. They were called Star Data terminals. I would look at those terminals to look for the stocks that were behaving abnormally. And I would write down a list of the ones that were behaving abnormally. I would race home. I would download data from a charting service where you had to enter in the symbol, wait for the data to download, to put into a software program. It took like 5-10 minutes per chart. But I only had 3 or 4 stocks that I was looking at that were abnormal. And then I would look for patterns. I would look for what stocks were not only behaving abnormally, but breaking from these chart patterns that I had learned were predictive. I'll talk about that tonight, and I'll show you what these predictive chart patterns look like. And I started to do quite well. I actually paid my way through university. I was, a 20-something-year-old university student, drove a Porsche 911 to school. I think a lot of people thought I was some rich kid, but I actually was doing this from my stock market activities. So what I'm going to talk about tonight is sort of the concepts behind why abnormal activity is important and why it works. So our aim is to find market-beating stocks. And here is my one-year performance for this year for position trades. And so you can see there 84, whoops, I don't know why it always does that to me. 84.28% over the last year, a success rate of 64%. You might say, well, 64% doesn't sound very good, but you don't have to be right often to make money in the market. What you have to do is have significantly higher profits when you're right versus what you lose when you're wrong. And it's really important to understand this concept of reward for risk and expected value on the trades that you do. So that's the one-year performance, and it was achieved on stocks like this, which is one of the stocks that I traded this year. And this is RZLV. And I first bought it right in here, and it had this big run. The sell was up in here. And then another one from this year was this. We're trying to find stocks that move faster than the market. So right in here, and then exiting up in here. We'll talk a little bit more about why buying here and why selling here. I touched on it a little bit last night, but we'll certainly elaborate on that as well. But the goal, as I said, is to find stocks that beat the market. Most stocks, most of the time, are not worth trading or investing in because most stocks, most of the time, just do what the market does. Every stock has a correlation to the market. And the metaphor that I love to use is that of boats on a lake. On a lake, I live on a lake in the city where I live here, Kelowna, British Columbia. It's got this beautiful lake. And on that lake, we have motorboats and sailboats. And this is how I want you to think about stocks. We have motorboats and sailboats. Some stocks are like sailboats, and some stocks are like motorboats. Most stocks are like sailboats. They move with the wind of the market. So if the market is trending higher, most stocks move higher with the market. They don't really overachieve what the market is doing. They just kind of do what the market's doing. But then there's motorboats. Motorboats can move much faster than the market. They can even move against the wind of the market. The market could be trending lower, and motorboats can move higher. And so what we like to buy are the motorboat stocks. Now, I call these alpha stocks. Alpha stocks are trading on their own story. So you could have 100 oil companies that are generally going to move with the oil market. Price of oil goes up and down, oil stocks go up and down with it. But then there will be a few oil stocks that will move faster than the market because they are doing positive things within their own business that justifies them moving faster. In other words, if they go exploring for oil and they find a big new deposit, that stock could double in price while most oil stocks move up, say, 10% with the price of oil. So it's the alpha stocks that we want to focus on. Well, alpha stocks leave footprints, all right? It's very easy to find them if you know what to look for. And I built tools 25 years ago to find alpha stocks. And what I'll talk about tonight are what are the footprints of alpha stocks. We touched on it last night, so some of you probably already know where I'm going with this, but that's what we're going to do tonight. All right, so why do stocks move in strong trends? As I said, it's because they have fundamental changes in their business that are unique to the company that allow them to attract buyer attention because they have something significant going on. So an oil company discovering a new oil deposit, that's an alpha component. A biotech company coming up with a new drug, that's an alpha component. A software company coming up with a new AI program, that's something specific to the company that will make it perform much better than the overall market. You know, why has NVIDIA outperformed the broader market? Because they have fundamental things in their business, primarily building for the AI revolution, the need for chips, the need for their fast processors, which is fueling artificial intelligence. And of course, before artificial intelligence, their chips were fueling the crypto mining business. And so that's why NVIDIA has done much better than the market, because they have something specific to them that is driving the market fundamentally. Now, when I do these presentations, I'm always looking at charts. And people think, well, Tyler's a technical analyst and I don't believe in stock charts. I don't believe in technical analysis. Listen, neither do I. I don't think that stocks go up because the MACD crosses over or the stochastic is at some level. Those are just tools. Any indicator, any chart is just a tool to figure out what is going on with the company fundamentally. What I know, however, is something I touched on last night, and that is the stock market is not fair. There are always going to be investors that have better information than others. So when we look at a stock like this that is making a very strong move to the upside, it's because their fundamentals were improving, or at least the market's perception was improving. But the people that started this move here or started this move here, which led to these big gains, those were people that had better information than most of us. So when I say that the stock market is not fair, what I mean is that some investors get better information than others. We know that fundamentals drive stock price. We know that the reason stocks go up dramatically is because they have improving fundamentals. Their ability to make money in the future is getting better and better and better. Or again, at least the perception of that is true. But what I also know is that if I wait to read about these companies in the Wall Street Journal or watch for them on CNBC, I'm going to be a dinosaur, because the market moves before the media catches on. And so when I was doing that study back in the early days when I was a university student, what I realized is what my professors in business school were teaching me didn't really work. If you wait to read about it, if you wait for the earnings reports to come out, the stock is usually already priced in that good information. See, here's the thing. The stock market predicts the future. The stock market does not react to the past. Okay, the media reacts, the stock market predicts. And the reason the stock market can predict is because there are very smart people with access to good information that are doing in-depth research on companies to figure out what companies are going to have better fundamentals in a week, a month, a year, 5 years. Those big investors, and they're typically large investors that have the biggest funds, the best resources to do this in-depth research, they are doing the work to uncover tomorrow's winners. They're predicting what stocks will have great fundamentals in the future. And the thing is, when they figure out which stocks have the best potential, they go into the market, they buy those stocks aggressively, and they create the abnormal activity that I look for, that I learned 30 years ago what to look for when I was doing my reverse engineering. The reason those stocks start to behave abnormally is because these large investors are buying the stock aggressively, and they create the chart. And so when I'm looking at charts, I'm looking at what the big money is doing before the fundamentals catch up to the market action. All right. So I totally believe that fundamentals drive stock price, but I also believe that the stock market isn't fair and that some people get better information than others. They uncover it by hard work, by having expertise. I don't know anything about biotech stocks. I don't know anything about mining stocks. I know the basic concepts, what most of us know. But what I know is that the people who know the most, that do the in-depth research, that have the expertise, they uncover the hidden gems. They go in and buy the stock aggressively. They create the patterns that I'm going to teach you to look for. And then I can just follow them. I'm always one step behind that smart money, but I'm 10 steps ahead of the crowd. And that's what I'm going to try to teach you tonight. All right. So the next thing that's really important to be a good investor is to not expect to be right all of the time. Do not expect to be right all of the time. A few slides earlier here, I showed my performance for the year for position trades, and it showed a success rate of 64%. Now, if I'm right 64% of the time, that also means that I'm wrong 36% of the time. And yet I still had an annual return of 84%. How can that possibly be? Well, the thing is, if you take small losses when you're wrong and have much bigger gains when you're right, you can be right half the time and still do well. In fact, I know of people that are right 30% of the time and still make good money, because when they're wrong, small loss. When they're right, big gain. And over 100 trades, they do quite well. And this is a hard thing for people to understand, because most of us don't like to take losses, right? If I said to you, hey, this next trade that you're taking is going to be a loser, you wouldn't want to do it, obviously. It's painful to take a loss. And the result then is when people have a trade that isn't working, when they buy a stock, they heard someone on TV say it was a great company, they bought it, and then it goes down and down and down. They don't want to take the loss because taking a loss is painful, and we humans pursue pleasure and avoid pain. Well, if you avoid pain in the stock market, it means you don't take the loss, and that loss can grow from being a small, manageable loss to a very large, big loss. Now, I've been doing presentations like this, teaching classes like this for 25 years. I used to do it live. I would travel all over the country doing these presentations live. Now with technology, I can do it online. But when I would do it live, I might have 300-400 people in a room listening to the talk. And I would ask, how many of you have a stock in your portfolio that you wish you had sold months ago or days ago or years ago? And invariably, most people in the audience put their hand up. Most of us have those dogs in our portfolio that we wish we had sold, and it's now representing a really big loss that outweighs many of our gains. Well, if you have one of those or a few of those, the good news is you're normal, right? Normal human beings avoid taking losses, and that's why normal people are predisposed to fail in the stock market. So when I teach people how to invest and trade the stock market, it's not just about, hey, here's the rules for when to buy, here's the rules for when to sell, but also understanding our human emotion and what to know about why we avoid losses and how to overcome those tendencies, how to overcome being a normal human being. So if we're looking at a chart here, this is one of my losers. All right, the buy point was right here. And when I went into this stock, I planned to lose if it went through this floor. And about 2 or 3 weeks later, it went through that floor, I get out. And that saved me from sitting in that stock for the next 2 months almost, maybe 6 or 8 weeks. It's been a stock that's been a dog. It hasn't done anything. But instead of sitting there with that capital tied up, I took the small manageable loss and I could then put that capital into something else. Now, why did that trade not work? I have no idea. I really don't care. It met all my rules. It had the right pattern here. This is something called an ascending triangle. It had an abnormal update. It had abnormal volume. All of my rules were met. But unfortunately, whoever was buying here aggressively maybe got a little ahead of themselves. Maybe whereas anticipating some significant fundamental change that didn't come as expected. This stock still could do well 2 months from now, a month from now. And if it starts to move through this ceiling price, maybe I would consider it again. But for now, it was a loser that I've had to move on from. Now, when we are right, we have to let the stock work, because it's really important to recognize that our winners have to pay for our losers. We're going to have some losers. I say 3, 4 times out of 10, we're going to have a loser. That means 6 or 7 times out of 10, we're going to have a winner. And when we have a winner, we have to let it win. Don't just, let's say this is GoPro. We had a little buy signal here. It would be very easy to just jump out right here because we had this big update that kind of closed weak. But if you did that, you missed out on this next leg of the upward move. And so, you could take a small profit there, but it never really gave a sell signal until over here when this upward trend line was broken. And the difference between that and that is pretty significant. It's about a 50% difference in the performance. So when you have a winner, we have to let it win. And to do that, you have to have an exit method that has been tested over a large number of trades. Now, I'll talk briefly about exiting when I look at some examples, but I go into much more detail on the exit side of the equation in the courses that I do, because we have some tools that I have to give you, and I only give those to my students, risk reward lines and these different concepts about trail by 2 until 3, the different exit methods that I use. We can use patterns, and the simple pattern of for an exit is a break of trend line. But there's actually other methods where we can use the historical volatility of the stock to define stop loss points. And we keep stepping up our stop loss point based on the historic volatility of the stock. Well, those are kind of complex topics that I've got a lesson that's about an hour long that goes into that. We're not going to go into those finer details tonight. That's, again, things that I go through in the course material that I have. But we'll talk about some of the exits as I pull up some examples. All right. So what do I focus on? Number one, as we talked about in last night's webinar, and if you missed last night's webinar, it is on my YouTube channel, Stockscores.com's YouTube channel. Just take a look for the webinar from Tuesday, October 21st. But the primary thing we're always looking for is abnormal trading activity, abnormal price action, and abnormal volume. If a stock is trading in a boring sideways pattern, but then breaks to the upside with abnormal price movement and much more volume than normal, this is a break from a predictive pattern with abnormal volume, abnormal price. You'll see it as I go through examples. I do this over and over again. How did I figure this out? 30 years ago when I was reverse engineering the stock market, that's what I found started most upward trends. Now, it's important to understand that while almost every market-beating stock starts its trend with abnormal activity, not all abnormal activity leads to market-beating trends. We talked about that last night. So the key is to look for abnormal activity from a predictive chart pattern. So that's our next criteria, a predictive pattern. And so there's a dozen different patterns we can look for. So one is called an ascending triangle. So if we move into this pattern that kind of looks like this, we call it ascending because the bottoms are rising. You might remember from last night when bottoms are rising, that's a sign of optimism. And we have a ceiling price here. We talked about that last night as resistance. So we have resistance here. We have optimism here. We have low price volatility here, so low volatility. And then we look for the abnormal price break, so abnormal price with abnormal volume as a predictive pattern. So an abnormal price break from low volatility, from optimism through resistance. I have built tools to find these things. I'm going to show you those tools at the end of tonight's webinar. Be a good loser, have good risk management. Every time we take a trade, we are going to plan to lose, and we're going to let that loss point, that stop loss point, define our position size. Sometimes we might have a position that's a $1,000 position, and sometimes for the same amount of risk, we might have a $4,000 position. Because every stock has its own price volatility, we're going to have risk management that's built on this idea of being a good loser. As I said, when we have a winner, we're going to be patient. We're going to let the winner win. We are not going to be greedy. We're not going to try to get in at the low or out at the high. If you try to do this, you're going to lose because you're always going to be trying to be perfect. So here is an example that we can take some of these points and drive them home. This is a stock that went from having pessimism in here because the tops were falling to then being neutral here and then starting to build rising bottoms. And it broke from sideways trading through resistance first here. We had optimism and it broke. And then it went up for a bit. Pretty good move here from $10 to $17. And then it went into another sideways pattern. And this is called a cup and handle pattern. So it's one of those patterns that I teach. So it's got a little cup here and a handle. And then it breaks out of the handle from optimism, from low volatility, with abnormal price action, volume started to increase, and it went for the next leg of the move. Now, I'm always asked, when do you sell? Well, as long as the trend line is in place, you hold. This right here is a break of the trend. This is what we saw in gold 2 days ago. It broke its parabolic trend. And when that happens, price will come back to the linear trend line, which is what this stock has done. I'm going to draw this a little more clearly here. So if I draw a trend line, starting when the trend starts and going across this low point right here, we call that an inflection point. As price runs away from the trend, it's getting more and more risky for a pullback. When it breaks the parabolic trend right here, that's our first sell signal, and it indicates that the stock is likely to fall to the linear trend line. These are some of the rules that I teach. They're not complicated. If you can draw a straight line with a ruler, you can apply these rules. Notice that once it broke the parabolic trend, like gold did 2 days ago, it has fallen to the linear trend, which is what gold did today. It only took 2 days for gold to fall to its linear trend. When it gets to the linear trend line, it's likely to bounce. So this stock will likely bounce in the short term. That doesn't mean it's over for the weakness. It could bounce for a couple of days, then roll over and move lower, or it could come right back up. So, before I started our webinar tonight, I was talking a little bit about gold, and that's what I see in the future for gold. Just like on this stock, it had to run up, it went parabolic, it broke the parabolic trend line and pulled back. So this is a stock that we have to let the winners win. It had a buy signal in here for this run, and then it had a new buy signal in here for this big move. And I'm going to show you a tool that will help us find these things. So how long does it take to find stocks like this? Well, I've got a number of different strategies that I teach in the investor course from Stockscores. And we'll talk more in depth about the courses on Saturday. So make sure you're registered for all the webinars. Tomorrow, we're doing one on day trading and swing trading. And then Saturday, we're doing it on position trading. And again, if you're not registered, just go to the Stockscores homepage, scroll down, and you can see here the sessions. This is our session tonight. This is tomorrow's. This is on Saturday. They're all free. And so make sure you're registered for those. So how long does it take? Well, applying my daily strategies, which are those 4 that are listed under 15 minutes a day, takes about 15 minutes a day. That's when you're starting out and you're a little slower. It could even take a little bit longer when you're learning. Once you're good at it, like I do this process in 2 or 3 minutes a day, looking for the stocks that are behaving abnormally. I cycle through the charts. I'm going to show you that process at the end of our webinar tonight. But you don't have to do it every day. There are strategies for the even more passive trader, more of an investor, that take 15 minutes a week. Saturday morning, you can run these strategies, the Stockscores Simple Weekly and the ETF Weekly, to find those longer term trades on a weekly chart. Stockscores Simple and Action Breaks are the two that I do most days. Abnormal breaks I do as well. Bottom fishing I only do when the market's coming out of a downward trend. So we're not in that scenario right now because we've had a pretty hot market the last few months, lots of hot, strong stocks moving up. But that's not a lot of time. And again, I'm going to show you that process. We'll go through it step by step in a moment. So how do I find opportunities? I use the Stockscores Market Scan. This scanner tool was built for position trading. It's not really built for day trading or swing trading. I have other tools for that, and I'll show those tomorrow. For position trading, we use the Stockscores Market Scan. It allows me to scan the entire North American stock market, so the Canadian markets and the US markets, in minutes, and using filters that are very unique to my approach. I don't do what everyone else does because I feel like if you do what everyone else is doing, you're going to get what everyone else is getting, which makes you average. I built my own tools so that I could find things that I can uncover before most people. So the Market Scan on Stockscores is a member-only tool, and you'll learn more about membership on Saturday when I go through all the details of that. But essentially, if you've taken the investor course, you get access to this tool for 6 months, and then your access going onward for the next year, whatever number of years, is $300 per year. So it's relatively cost effective. If I wanted to look for abnormal stocks on the Canadian market, I could pick Abnormal Breaks US or Canada. If I wanted to do US, I could select this scan. So if I go Abnormal Breaks US and I run the market scan, you will see in the blink of an eye, it found 25 stocks that made an abnormal price gain today. But I don't know if these have good chart patterns. So the next step in my process is to review those charts. And I click on my slideshow viewer here, and I start to cycle through these charts. Well, I can see that this stock had an abnormal day to the upside, and it traded more volume than usual. Okay, we're going to do this at the end of the session, so I won't go through this now. You're going to have to hang on, and we'll go through this together later in the presentation. But that's the process. It's pretty straightforward. It takes some practice. You have to know what to look for. And my job is to teach you what to look for. And that's what our course material is all about. The course material is in the Stockscores Education Center. Now, I showed this briefly last night, and I'll show it again. If I go back to the Stockscores website, and I go to the Trader Training menu, down to Education Center, you see here a list of videos. So the first group, these ones right here, this is the Getting Started section. And these are free. So anyone can go look at this. If you want to know how the Stockscores indicators work, there's a little video on that. If you want a tour of the Stockscores website, there's a little video on that. So these are free. However, to look at the foundation, the investor, the active trader, you have to be a member. So last night we talked about the 6 elements of chart patterns. So that's our first lesson right here in the foundation section. I can read about it, click on the lesson, and I can read all about inflection points and support and resistance, all of the things that we talked about last night. I can watch a video. So if I go back, I can click on the little video icon, and then you can do an assignment where I give you some questions to answer to make sure you understand the concept. And then there's a little multiple choice test where you can test yourself to make sure you understand the concepts. So that's the foundation section. And then in the investor section, you learn the actual strategy. So remember I said that the exit rules that we have are taught in the lesson. Here it is. So the investor exit strategy, there's a lesson on that. And we talk about risk multiples and things that are unique to my approach. And there's a written lesson. There's also a video. And so I can click on this little video icon, and there's the lesson. This particular video, I'm not sure how long it is, maybe half an hour long. No, it's only 11 minutes long. So not that complicated, but you go through the rules based on what I've written in here in the written lesson and then in the video. Now, the active trader section is for the day traders and swing traders. We'll talk about that tomorrow. If you do the investor course with Stockscores, and I'll talk about pricing and that sort of thing in a moment, it gives you access to the foundation lessons. It gives you access to the investor strategies. It gives you access to the market scan tool and the preset strategies. You get email support from me. I only teach about 100 people per year. And so I'm the only one who teaches. I don't have a bunch of people that work for me that do the teaching. I have people that work for me that keep the websites up and things like that. But I'm the trading expert. I've done this for 35 years. And so I'm the one who does the teaching. So when you're stuck on a question about, applying a strategy, you email me and that answer is coming from me directly. And with the course, as I said, you get 6 months access to those tools, which you can renew at $300 per year. Now, the Active Trader course is what we'll talk about tomorrow, so I won't go into this in a lot more detail, but essentially it's everything in the investor course, plus my special indicators for day trading and swing trading, and access to another service that we offer called Active Live. We'll talk about that tomorrow and on Saturday. Stockscores Active Live is a real-time webinar that runs every day where you can see my analysis screen, the same screen that I'm using to pick day trades and swing trades. You can see that screen running throughout the day. And I guide you through it for the first part of the day, and then I review all of the trades for that day at the end of the day, all part of that daily webinar. So that happens every day. It runs from the pre-market open all the way till the extended session close, the analysis running all day long. And again, I'll show that tomorrow. Tonight, it's more about investing. So, as I said, we do live training a couple of times per year to complement that online material. And so if you want to learn it quicker, get up to speed a little faster, this live training is really helpful. Because the online material is great, but this is going to force you to go through the process with me. So our first overview class, this first live training class, is on Monday, November 3rd. So on Monday and Tuesday, November 3rd and 4th, for about an hour and a half each evening from 6 till 7:30 Pacific, I'm going to walk you through primarily the foundation concepts. And then on Wednesday, Thursday, and Friday of that week, I'm going to do market scans with you. So we're going to practice searching for opportunities. Now, for the active trader students, you're going to get a free month to follow my daily live webinar where we're doing our analysis all day long for day and swing trades. All of these classes are recorded. I'm always asked, I can't attend Tuesday night because I go to waltzing class or whatever you do on Tuesday nights. If you miss one, it's not a big deal. They're all recorded. It is better to attend live because then you can ask questions and I can give you answers live. If you miss one, then you have to email me to get your answer to your question. So that's live training, starts November 3rd, and it is included as part of a special offer. So for anyone that registers for the investor or the active trader course or the mentorship course, because the mentorship course includes all of this as well. If you register before Halloween at 11 p.m., probably want to do it Thursday so you can go out and do all your Halloween partying. But anyway, before Friday, October 31st at 11 p.m., anyone who registers for these investor or active trader courses is going to get the overview classes on Monday and Tuesday, the 3rd and 4th for free, the market scanning classes, Wednesday, Thursday, Friday included. And then for those who do the active trader course, you're also going to get a free month of Active Live. And for those that do the mentorship course, you get another free month of Active Live. So you actually get 2 months of Active Live if you have done the mentorship and the active trader course. Now, if you're upgrading from active trader to mentorship, well, then you just get 1 month for the mentorship component. Pricing. All this pricing is in Canadian dollars. So investor course is $2,995, active trader $39.95, and mentorship $59.95. And if you like discounts, here's the codes, here's your discount codes. You enter those at checkout and you're going to get $500 off. These expire October 31st at 11 p.m. So you want to use those codes. You can use it tonight. You can do it in 2 days. You can do it whenever, but it has to be before October 31st. Now, I recommend you do it sooner than later because the more time you have to prepare for our live classes starting November 3rd, the more you're going to get out of them. But you can leave it until October 31st if you want. Many people do, but it's open right now. You can start immediately. Once you purchase the course, we will permission your account, so you'll have access to the online material, and you can start right away. Again, I'll go into the courses and the tools in more detail on Saturday. And so if you have an interest in knowing more about the courses and the indicators I've created, more about the market scan tool, make sure you attend on Saturday. I will go into it in a little more detail as well. So that is my email address there, tylerb@stockscores.com. If you want to register for the courses, we're going to do a market scan in just a minute, and then we'll do stock questions as well. But if you want to do the courses, you just go to Trader Training, learn how to trade, and you can read about the courses here. There's little videos on each course. You can watch those, and you can purchase the course right there from that link. Order Active Trader right here, and order Investor. So if I wanted to do the Investor, I click on that. I enter in the discount code, which is 500 ITA25. Why didn't that work? 500 ITA25, and apply discount. And you can see there it takes the amount off. Then you just go through the process to your checkout, and we'll give you your access within typically a few hours. If you do it in the middle of the night, it might be the next day, but that's how that works. All right. So I promised that we were going to do some market scans. So let's go back to the market scan tool, and let's run that abnormal breaks US scan. This is kind of my favorite these days. It looks for stocks that are abnormal. So we're going to run this scan, and it found 25 stocks that made an abnormal gain. Of these 25, I may like 1, I may like 3, I may like 0, but I'm definitely not going to like 10. All right, most of them are not going to have the right pattern. So we're going to go through this in a slideshow. There's two types of ways to view charts. The gallery view, I'll just show you gallery view quickly. Gallery view is once you're fairly experienced. This is just a quicker way because these charts are little mini charts, 10 per page. So once you're good at this, you can scroll through these really quickly. But when we're starting out, we're going to take a little more time to look at our charts. So we're going to do by slideshow. So I'll just click on slideshow right here. And now we see a nice big chart. All right, so the first one, let's just analyze it together. It's making an abnormal price gain, a little bit of extra volume. The problem is that it's not doing so from low volatility. See all this volatility here? It's a good looking stock, but it's likely to pull back before it goes higher. So it doesn't meet my requirements. So I go to the next one. All right, this one, the scale's really skewed, so I have to zoom in on this because it had this huge gap down over here. So let's go to a shorter term chart. Can't even really see it there. All right, so I've gone to a very short term chart, and the problem is the gain right here, but it's not really through resistance. It's a little choppy leading into this, so not what I want. So I go to the next one. All right, this one is interesting because here I can see a stock that was pretty low volatility. It had a big day to the upside today. It's traded abnormal volume and abnormal price the last 2 days. So that looks pretty good. So then my next step in the process is to do my risk management. So I have to figure out where would my stop be. So I'm going to go to the 15-day chart so I can see where support is. You can see the abnormal price action and volume yesterday, and you can see it today again. Lots of abnormal action. We were trading this stock in my active live service yesterday and today, actually. So here we have low volatility, we have optimism, we have a break from that yesterday. So yesterday was a good place to buy, but today it's still okay. And if our entry is $1.40, we're going to plan to lose down here somewhere at about 85 cents. That's a big percentage drawdown, but that's because the stock is very volatile. So my risk on this trade is $1.40 minus 85. So that's 55 cents a share. So if I bought 1,000 shares, my risk is $550. If that's too much for you, if you don't want to take that much risk, then you're going to buy fewer shares. Again, this stock is very, very volatile. So your dollar position size will be much smaller. Now, if all of this seems a little confusing, a little overwhelming, trust me, I go through this very slowly in the material. We take, 3 or 4 lessons to drive home all of these concepts. I'm trying to give you the quick overview today. All right, so that's IBIO. Let's go through a few more. This one also making an abnormal price gain with abnormal volume. The problem here is your upside is limited by this resistance. So it's pretty good. It has it's got about 2 to 1 upside for the risk. I think it's okay. I don't like this longer term pessimism. It's still below the downward trend line. So I wouldn't buy this. I think it's interesting, but not good enough. Now that whole process, I did that in seconds. It's going to take you some time to learn all these rules, and that's what the course material is for. All right, this one is breaking from too much volatility. It's a good hold if you're in it. This one is still in pessimism. This is a flag break, so this is a good continuation pattern. We had to move up, we had a pullback, and we broke the pullback. So this should go higher. It's more for a swing trader, I would say. Similar situation here, breaking a little upward, little pullback in the upward trend line. It's not too bad. I wouldn't say it's outstanding. This one's too much pessimism. So you'll see that as I go through these charts, I have reasons why I like things and reasons why I don't. This one's actually pretty good. This has sideways trading, optimism building, abnormal price gain. I'd like to see volume a little higher. It's not that abnormal. I'd give this one a 6 out of 10. When I give a stock a 6 out of 10, I mean, I think it's got a 60% chance of working. All right, so that's the process. We'll do this again on Saturday. We'll do a market scan as well. This one looks pretty good. Volume could be a little better. I'd give this a 6 out of 10. IBIO, I'd give a 6.5, maybe even a 7 out of 10. So I think it's got a 65 to 70% chance of working. If I give a stock a 6, it means I think it has a 60% chance of working. I prefer stocks that have at least a 65% chance. Okay, so that's the process. It's not that time consuming. The tool does most of the work. You saw how quick it was. I hit the market scan button. It went through the entire US stock market. And in less than a second, it gave us a list of 25 stocks that were behaving abnormally. All right. So I think we can just do this poll. As I said last night, I don't like to bug people. I will give you an email that gives you more information on the course if you want it. So if you would like more information on any of these courses, just say yes to these. If you answered this last night and you already said yes, you don't need to do it again. But I know some of you maybe missed last night's webinar live. Maybe you just watched the video on YouTube. And so you can just answer here, yes, that'll put you on the list. And I will send you an email on Sunday after our Saturday session, maybe even Saturday, I'll send it. That'll just give you a little more information on the courses and links. Of course, you don't have to wait for that. You can register for the course at any time, investor or active trader. But you have until the 31st of October to get the discount. And if you don't want to be on the list, just say no and I won't bug you. All right, I'm going to leave that up for another 10 seconds and then I will just show you some comments and I will then invite your questions. And as I said, we have a very big audience, so it's hard for me to get through all of the questions, but I'll try to do my best to go through as many of these as I can. Okay, I'm going to take the poll down now because I think everyone's had a chance to answer. So let me just kill that. And all right, so on screen here, you should see some comments that were emailed to me in the past with, just past students that have been able to really benefit. I've been teaching for 25 years, and some of my original students, I still hear from them. They took my course 25 years ago, and I've had many times people say, I retired early. I got to where I wanted to be because of the knowledge that you give. The cost of my courses is pretty cheap compared to the effect that they can have on your long-term retirement. If you just improve your performance in the market by 1 or 2%, it can mean hundreds of thousands of dollars of extra retirement savings over the course of many years of savings. So this knowledge is really important. If you're managing your own money, even if you have someone doing it for you, I think it's really important to know what's going on. And it's so critical to have this kind of information. Risk management is so important. Having strategies for when to buy, when to sell. These are all things that I've spent most of my life fine-tuning. All right, so I'm just trying to get my questions up here. So as we already did the market scan, what I'm going to do now, there's my contact information. We're going to just answer a few questions. I'll look at a few stocks and Someone asking, thanks for these. I'm having real difficulty understanding what represents inflection points with your examples. It seems like you choose some and ignore others. Yeah, when I go through a chart, I don't highlight every one. I was trying to be quick. So if I was looking at this chart, inflection points or any little low, so any of these little lows, we actually have a formula that determines this. I actually have an indicator that will plot these on your charts for you if you're a day or swing trader. But any peak or valley are inflection points. And so once you have them, then you can connect the dots and define support, define resistance. This stock is breaking through resistance, while resistance is defined by these two inflection points here. The reason I don't like this one is because it's breaking from far below resistance. And so it's a little bit volatile into that. Again, these are concepts. I go through these in a lot of detail in the videos that I've created, and you'll learn it. It just takes a little bit of time. Question, do you use options at all in your process? I don't use options myself, but many of my students do. I'm just more interested in trading the stocks, but it's mostly because I like to trade lower float stocks, which are quite volatile and they don't generally have options trading on them. So I don't. Now, the other part of your question was to look at T.TI, so I'll just quickly do that. And again, please, if you're asking me about a stock, please give me the symbol. I don't have every symbol of all 10,000 stocks that trade memorized. I know quite a few, but not every one. So if you want me to look up a stock, don't put in the company name, put in the symbol. All right, so this stock, you're asking about this. This gave a few buy signals, and we should know the buy signals a little bit by now. So here's resistance, here's optimism, here's an abnormal break, abnormal volume. So that was our first, well, actually we had a buy signal down there as well. And then another one happened right here. This is a pattern called a rectangle consolidation, and it broke from that right here, and that led to this little run. So we've had a number of buy signals. The stock ran away from its trend line. Remember I talked about when price runs away from the trend line, it comes back to it. Well, it ran away from the trend line. Now it's coming back to it. I think that, if you're in this, it's probably still an okay hold long term. If you're thinking about buying it, I would wait till it breaks this pullback. So if it continues to pull back and then bounces off the trend line and breaks the pullback, then I might consider buying it. I think right now it's a hold, but it's a bit of a cautious hold because it's, obviously in a bit of a pullback right now. All right, someone asking about NXE, so T.NXE. And for Canadian stocks, you always have to put a prefix in front of it. So Next Gen Energy is a T dot for Toronto and then NXE. So I'm going to look at this on a 3-year time frame, and it's in a good upward trend. You can see the trend line is intact. It's risen to this resistance level, this inflection point here. We have a simple rule. When price rallies into resistance, it usually gets stuck at resistance. And that's why we're seeing it move down the last 4 weeks. Most oil stocks did this. You saw a lot of these smaller, well, not even smaller oil companies, but oil companies rally into resistance, get stuck. It probably goes sideways here for a bit. I'd be a little bit worried if it breaks this upward trend line. It hasn't done that yet, but that's something to watch for. Okay, can you take a look at T.PRL? And I know there's a ton of questions coming in. I'm pulling those out as best I can, but I won't be able to get all of them. All right, so this one. The last time, remember we talked about who's winning the war, buyers or sellers? In this stock, the sellers are winning the war. This is a stock to not be in. This is a stock that's really got problems. You can see very strong weakness. It is coming into a zone of support. Over here, we had this support zone. So I think it falls to that point and bounces, but there is no positive signs in this stock. I would not want one. All right, someone asking about T.X. This also trades in the US. I think it's ABX. And much like most gold stocks, it's had a little bit of weakness the last few days. It's broken its little upward trend line. Gold itself is still hanging in there. It's still holding its upward trend line, but I think it's time to take some money off the table on these gold stocks. They've had big runs, and you maybe have to sell it all, but I'd want to take some money off the table. I think that the upside is limited, and I think there's still more downside. All right, next one is FDMT, which was actually one of my trades this year as well. And you can see that this stock had sideways trading, optimism, abnormal price break. What do you think the day was that I picked it? Right here. That's actually a few days later. I found it there. This was in my weekend newsletter. And if you, in fact, I'll show you. If you want to subscribe to the weekend newsletter, there's a few ways to do it. But if you go to Stockscores analysis, free weekly newsletter. And if we go down here to, I think August 10th was the date. Where is it here? Yes. So here is, see here it says FDMT on August 10th. So I featured the stock in this free weekly newsletter, and this is how the chart looked on August 10th. So right, there's open, which is another big winner. FDMT, this is how it looked right there. It made that abnormal break. Okay, if we go back to the chart now, I just wanted to show you that I'm not, using hindsight trading. I actually picked it right here. And that was at, $5.50. Basically doubled. If you're still in it, it's still a hold because the upward trend line hasn't been broken. But if it does break this upward trend line, you'd want to sell. For now, it remains a hold. All right, I'm going to do two more, and then we're going to wrap it up. So someone asked me about CLS. Now, I don't know if you mean the Canadian. Well, here's the US listing of CLS. It's listed on Toronto as well. So who's in the driver's seat? Buyers, right? We have rising bottoms on the chart. I can identify all these rising bottoms. That means the buyers are in control. This is an optimistic chart. I would not buy it here just because it's too far into the upward trend, but it's a good hold. If you're in this, no reason to sell unless it breaks this upward trend line. And so until that happens, I think you're in good shape. All right. Well, I hope you've enjoyed that. We're going to do another session tomorrow, so make sure you're registered for tomorrow's webinar. We'll talk about day and swing trading. Even if you don't have an interest in day and swing trading, I'm pretty sure you'll learn something about reading charts, about risk management. You'll see some of this really specialized tools that I've created for day and swing trading that give us an edge in the market. So make sure you're registered for tomorrow's session as well at the same time, 6 o'clock p.m. Pacific time on Thursday. If you want to learn more about the courses, about my indicators, about my tools, and the general Stockscores.com website tour, I will do that on Saturday at 9 a.m. Pacific time, and you can register for that as well. Just go to Stockscores.com. On the homepage, you will see the links to register. I hope you've enjoyed this class. If you have, do me a favor, click on the like button if you're watching this as a video, and tell your friends to join us for the next couple of webinars. And if you have any questions, you can email me at that email address I put on screen, tylerb@stockscores.com. Deadline for the course sign up to get all those bonus materials and the discount is October 31st at 11 p.m. You can sign up anytime before then, but that's your deadline. All right. Again, hope you've enjoyed it. And as always, trade well.